Hello everyone and welcome to my channel. I am Neha and today in this class we are going to discuss about the accounting cycle. Okay, so what exactly is accounting cycle? So we need to record all the transactions. In our business, day-to-day business, there are n number of transactions that took place. Okay, so we need to record all these transactions. For recording in an account, we use accounting cycle. It's a method. Okay, so from the very beginning till we publish our financial statement. So financial statement is the disclosing of all your different types of transactions that you have made, your profit and loss and everything, you're disclosing it. So all these things took place under the accounting cycle. So as we can see, there are 10 steps in the accounting cycle. So what is the purpose of disclosing your all the financial statements, your all the transactions, your what is your how you are performing everything? So the main reason is so that your users can understand the company in a better way. Okay, so what they understand the company's performance, company's health, company's situation. And after this, once they understand the company's performance, how company is doing, they are able to make informed decision. Okay, alright, so the very first step in accounting cycle is identify the transactions or events. So you need to quantify them. What your transactions in monetary terms in money, like you need to quantify them, that this amount has been given in this work or in this process, and this is how you have to write down all the transactions or events, quantify them in a monetary terms. This is the very first step. Now the second step is source document. What is this? So you have to prepare a document. You have to be ready. It's kind of a, you can say, a proof, okay, or an evidence that you have made these transactions. So you need some sources for that. Source like receipt, voucher, bill, document, anything where it is mentioned that you have made any kind of transaction. It can be a receipt, it can be a voucher or anything. So that's the second step. You need to source your documents. Okay. After this, we will come to the journal. What exactly is journal? Journal is a primary book. It's a primary book only. Okay. So you need to record that these transactions or events in the journal. Okay, so there are two sides. You can use any method. There are two methods. We use debit and credit rules to enter the transaction in journal, and there are two methods for that. Modern rule is there and golden rule is there. We will discuss it later. So any of the method you can use and make the entries. Right? So what we understand basically from the term journal is that it may be a single book. But it is not exactly. It is not a single book. There are many categories in journal also. So, like if you are doing, there is one category that is prime entry or subsidiary books. Okay, for your regular transaction, you use prime entry or subsidiary books. Like purchase book, purchase return, sales return. There are so many. Cash book. Okay, they all come under the primary book, primary entry, okay, or subsidiary books, where we make all the regular transactions. And if the transactions are irregular, then there is another book which is general journal or journal proper. Okay, so there you can do trespass entry or which is very irregular entries. Okay, rectification entries. These all are irregular one, so they comes under the journal proper. Okay, now we come to the posting to ledger. After this, we make the transaction, we go for the posting our entries in the ledger. Okay, we also called it as journal ledger. It is not a book only. Okay, there are many ledgers in it. In ledger also there are many ledgers. Similar to the journal, there is not single journal, there are many journal. In the same way, there are many ledger, not one single. Okay, and it is in a T shape. The ledger is in a T shape, and 6 kinds of accounts are there mainly. Mainly in ledger, there are 6 types of accounts. We will discuss it in some other video. Drawing, expense, asset, liability, equity, and revenue, I think. Yeah, these are the 6 accounts which we discuss in the ledger. All the entries, whatever they are, all the accounts, okay, they are classified into these 6 categories only. Okay, so what exactly happen when we are making any entries in the ledger? So sometimes there are 2 sides, debit side and credit side. Okay, so sometimes the debit side is bigger and sometimes the credit side is bigger. So when the debit side is bigger, we say debit balance. Whatever the amount is remaining, okay, when they are not equal, some amount is remaining obviously. So whatever amount is remaining, it is known as balance. So if the debit side is greater, then we call it as debit balance, and if the credit side is greater, then we called it as credit balance. Okay, sometimes there are no balance. There are chances when there is no balance. Okay, now we come to the next step, posting to trial balance. So trial balance is then the next step. We take it we make the postings in the trial balance. Okay, it's one statement only. We have a list here, and we have debit and credit column. Similar to the ledger, we have debit credit column, but there is one statement only that you have to make, and we will disclose these things in a detail. We will discuss them in detail in some other videos. Then we have total, where debit balance should match the credit balance. Here we will tell you whether the debit and credit balance are matching with each other or not. If they are not matching, then we need to identify the error here only in the trial balance. Sometimes maybe we bypass the mistake because there is no balance, okay, and debit is equal to the credit side only. So but the chances is there can be some error which we bypass. Okay, if there is any error, then it is the responsibility of the accountant that he has to check and rectify by preparing a worksheet. So in worksheet, as the name suggests, you have to work for, like you have to rectify, you have to make the corrections. Okay, so before we need to do calculations, recalculations. That's why it is called as worksheet. So the accountant will calculate and recalculate here, and then the next step is adjusting entries. So before preparing and going to the financial statement, which is the main important thing that a company do for their shareholders and the users. So what we do is, before preparing a financial statement, we have to do final account adjustment. Okay, so majorly 4 entries are there, and your financial statements are correctly following the matching and accrual concept. It is very important that your final financial statement must follow the accrual and matching concept. Okay, they must be in accordance with the accrual basis of accounting. So there are some principles of accounting, so that should be followed. Okay, and we'll make a separate video on this also. Now we have to prepare another trial balance, and after this, once you adjusted the entries, do all the calculations, recalculations, make all the adjustment, now you have come to the adjusted trial balance. So after all the adjustment, you have certain figures which is adjusted one, so you put all those in this adjusted trial balance. balance. These are the final figures which you make the entry, and the last you prepare a financial statement. It is not the last one. There are a few other steps also, but this is last for the purpose of the users or shareholders, where you are disclosing your all your income, your profits and everything. So this is good for the corporate perspective, like your statement of your profit loss, which is known as your income statement, your balance sheet, or you can say it like financial position of the company, cash flow statement, statement of changes equity, notes to financial statement. Everything you prepare in the financial statement and you disclose it. Okay. If there is a sole proprietorship or a single owner business, then they prepare trading profit and loss account only, balance sheet and cash flow only. Okay. We close all the expense and income account in that case. And the last one is closing the book. What exactly we do here? We close all the entries. So prepare closing trial balance to check all the assets and liabilities are closed properly or not. We come to this last step, that is closing the book. Financial statement done, we have prepared and disclosed, but now we need to check whether we have closed the books, like our assets and liabilities are closed or not. We come to this point. Okay, now I'll discuss about this. What is journal? Journal will talk little bit about, I have already told you. So here is some definition about. So these are the steps. I hope everyone is able to understand that these are the 10 steps in the accounting cycle, how the whole process from the very beginning of identify your events and your transactions till you prepare the financial statements, everything comes under the accounting cycle only. So what is journal? It is a primary entry book where every transaction is recorded before posting it into the ledger book. Okay, here transaction is recorded in a chronological order. It means day to day wise. Every day you have to post whatever the transactions are taking place. And journal is not a single book. There are many categories: prime entry or subsidiary book, and journal or general journal or journal proper. Okay. Next is ledger. It is a principal book of the accounts. Here transactions related to particular person, property, revenue or expense are recorded. Okay. In ledger, you have to enter recording, or you have to enter the amount related to the particular person, property, revenue or expenses. The main function of a ledger is to classify or sort out all the items present in the journal. So whatever you enter in the journal, now you have to classify it, so you use ledger. That's why we said it's a T shape. There are two sections. And the next one is your trial balance. So it is a list of debit or credit balances extracted from various accounts in the ledger. It also includes cash and bank balance from cash book. Since every transaction has a dual effect, we know that, and debit and credit. In the same way, every debit has a corresponding credit and vice versa. It is vice versa. Okay, so vice versa, the total debit and credit balance extracted must tally in trial balance. Okay, so the total debit and credit balance, whatever we extracted from the ledger, it should be tally, like it should be similar in both the sides. Okay, hope it is clear now. Everything is clear. So we'll discuss another topic in the next video. Thank you.